what is up, guys? Welcome back to another video. My name is Evan. In today's video, I'm going to break down the exact trade that I took today. One and only trade that made me 22+% on the day. Hopping into my screen, you can see we have QQQ pulled up because what other instrument would we trade? None! I don't care, right? I'm trading QQQ because I like QQQ and I like how it moves, and that's it. So obviously, as you can see on my screen, we have two simple levels drawn out. We have the pre-market highs, 385. We have the pre-market lows, 383.7. I'm looking for a break of either side, right? But key here is a break with momentum. So obviously, you can see we have both of those marked out. If you guys don't know already, the red arrows are my entries, the purple arrows are my exits. And we can see here going into the day, as soon as the market opened, we got a chop fest up in here, right? Chop, chop, chop. One key thing to keep in mind is we are above the moving average. Yes, that moving average is the orange line right here, the 200-day moving average. Very key indicator to base some of your trades off of. One thing that I would throw into your charts if you don't already have it. So you can see chop, 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 but we are above that moving average. We finally break out. Now, when I tell you guys this candle was so quick, right? This candle right here was instantaneous. No news came out, nothing. It was just 9:36 a.m. and it decided to absolutely spike for no reason. So I couldn't take that break because it was way too quick. So my initial reaction is, okay, I'll wait for a pullback and a retest of the 385 level, right? So we pull back. We end up breaking back down below it. But what do you know? We find support at the 9 and 20, and obviously 9, 20, and the 45-day EMA is all lining up perfectly. We end up finding support in this area, pushing back up above that 385 level here. And then that's when I end up taking my first entry is when we break above the previous high of day right here. So as soon as we break above that previous high of day, I enter my first contract, just one contract, keeping it light here, because I know that with this pullback, we could have another pullback. And then obviously you can see here at 9:45, this is when news did come out. Now news came out 9:45. I was only in one contract. This candle sent me into 17% drawdown. I'm just being completely honest, completely transparent here. The reason I was completely fine with that, number one, was because we had the 9, the 20, and the 45-day EMAs all lining up with support. On top of that, we had this 385 level as support as well. We had multiple signs of support in this area, okay? So that's one reason that it kept me in. The second reason was that candle was off of news. The 9:45, this candle right here, was off of news. And what normally happens during news is whenever news is released, right, the market will react in one direction very abruptly, right? Obviously, as you can see, news came out, we freaking sent straight down. Now, what normally happens right after that is the market will correct itself. It's typically an overreaction whenever news comes out. Sometimes it's not, sometimes it is. But more than likely, I would say, I don't know, 7 out of 10 times, 7 or 8 out of 10 times, it is an overreaction. So with that overreaction, keeping it in my mind, that paired up with this support area right here of the 9, 20, 45, and that 385 level, I kept in my trade and I actually entered another position once we started to push back up. So we had this kill candle down. Once we started to move back up with this candle, I entered another contract just because what typically happens is we overreact and then we overcorrect into the right direction that the market was headed in the first place. So as you can see here, I entered another contract. And we ended up starting to push back up. We never broke above the previous high. Now, I was waiting for that. The whole time we ended up chopping sideways. You can see 1, 2, 3 candles chopping sideways before we ended up breaking above that previous high slightly. And then pulling back into the 9. And then basically rallying back off of the 9. I finally got out at my level of 386. I'm going to show you guys where I got that 386 level real quick. If we go to the 5-minute time frame, you can see here, if we go to 386, we can see over on this side, I know you guys can't see my mouse. I need to fix that. But if you guys can see the crosshairs right here, there's a lot of consolidation around this 386 level right here, and we never broke above it at the after market close yesterday. We also had this rejection right here from yesterday, and maybe a little bit of a push above yesterday here at the close, but overall we stayed below 386. So that was my target for this trade, was 386. As soon as I saw 386, I got out of it. That was it. The market was chopping around too much. It was staying way too close to the 9 and 20 for my liking. I hate whenever the market stays this close. I guess I'll zoom in like that. I hate whenever the market stays this close to the 9 and 20, right? It just keeps me on high alert because at any moment we could break this 9, go straight to the 20, break the 20, go all the way down to the 45, and the next thing you know, I have a decent amount of drawdown in this trade. So luckily, in this case, we did not do that. I was watching this trade like a hawk the entire time. We ended up pushing up, right? Hitting that 386. As soon as we hit the 386, boom, I'm out. Finger on the trigger, boom, I'm out. I'm done. I'm not playing games. I'm not waiting for it to bounce around and pull back, and then I got to wait for it to go up again. I do not care. I do not care, right? I want out of the trade. And some people need to keep that in mind in their trades. I used to be that guy who would linger around. Oh, I need to wait for this to see how far it goes. I don't care. It doesn't matter. You make your money, you walk away, you come back the next day, you do the same thing over and over again. That's all that you have to do, right? And this is a perfect example of that. Boom, I'm in here. I wait for it. Boom, I'm in here again, right? Oh, 386. Boom, I'm out. See ya. Peace. Now I'm making this video for you guys. That's it. It's as simple as that. So that was the trade overall today. It was a little bit nerve-wracking. I was watching it like a hawk because we were staying so close to this 9 and 20 EMAs. Overall, we ended up smashing the target. I was wanting a 20 cent break on this, but I said, nah, I am taking my money and I'm getting out of here. So obviously, as you can see, 10 o'clock, we hit the news and things went absolutely freaking anabolic. So we missed out on that, but it was not worth the risk of waiting and this candle possibly being in the opposite direction. So overall, hopefully you guys learned something from this video. Hopefully you guys can take this and apply it to your own trading. This is a very simple, just trend day trade right here. We broke above the 385 level. We started entering contracts, slowly sized up, right? I was confident in my position. I ended up locking in profits at the exact level where I wanted to get out. Simple as that. Peace. I walk away from the screens, right? Absolute just savagery right there. If you want to do one thing right in trading, lock in your profits at your target and leave. You may be able to want to keep one runner, right? But in the back of your mind, you're always thinking about that runner. I don't want to think about that runner. I'm locking in and I'm dipping. That's it. So hopefully you guys enjoyed today's video. If you haven't already, hit that subscribe button down below. Like this video for more videos like this one. I will see you guys in the next video.